You are welcome to the Business Lens on Rapid TV Abuja. And in the world of business, let's look at some of the hot business trends. Starting from the Nigeria's crude oil and condensate output has slipped to 1.58 million barrels per day in October 2025, which is down 1.86% from 1.61 million barrels per day in September. Also, Nigeria records a major rebound in external financing in 2025, attracts $20.98 billion in foreign capital inflows between January and October, which is 70% higher than all inflows in 2024, and a massive 428% surge from the $3.9 billion recorded in 2023. Next is Nigeria's company income tax CIT revenue has surged to 2.78 trillion naira in Q2 2025, marking a strong 40.27% jump from the 1.98 trillion naira recorded in Q1. Away from that, we move to the next, which is Nigeria's equities market posts its worst monthly performance in history in November 2025, wiping out 6.54 trillion naira in market value, which is the steepest loss since NGX crossed the 10 trillion naira mark in 2013. And in the markets, the Nigerian exchange opens December on a mildly positive note as bargain hunters returned to the market after the record of 6.54 trillion naira loss in November. We will look at these stories and more. Stay with us. I am Divine Alex, and joining me are analyst Daniel Efa. You're welcome. And analyst Abiola Adekunle, you're welcome to the show.
Thank you.
Okay. So let's start up with the first story, which is Nigeria's crude oil and condensate output that has slipped to 1.58 million barrels per day in October 2025, which is down 1.86% from 1.61 million barrels per day in September, according to NNPC's latest monthly reports, despite the production setback that is driven by planned maintenance activities across key assets and delayed operations. The company recorded a strong rebound in natural gas production, rising to 6.99 million standard cubic feet daily from 6.28 million in September. However, the financial performance surged sharply during the same period. NNPC reported a profit after tax of 447 billion naira, up 106.94% from the 216 billion naira in September. Revenue also climbed to 5.07 trillion naira, an 18.74% increase from the 4.27 trillion naira. The company says strategic collaborations, efforts, ongoing facility maintenance, and all the other things that they mentioned is, what accelerated all of this. But let me come to you, Daniel, right? With crude production dropping to 1.58 million BPD in October, despite higher revenues, what does this say about our resilience? Do you think this is something that's, does it show that we are vulnerable, or what do you think?
I think it shows that there is a lot of work to do. I think we had this conversation some months back, and where we actually, I think it was in August, where we met our quota for OPEC in July, and the report came out, and I was like, it is not yet a trend, right? The NNPC is still struggling to meet its OPEC quotas, and that is where the real revenue comes, right? So until we're able to achieve that, there's still a lot of work to do, right? So even if yes, you might say you did a lot of profit after tax, you did a lot of profitability, but you've not even maximized your own quota. Maximize that first, and you realize that even that profit after tax will even be higher, right? So but so when you look at the grand scheme of things in the space that we operate, particularly when it comes to the oil sector, or the crude oil market as it were, we are one of those members of OPEC that are not really making a lot of money from crude oil sales, and that's because we're not doing as much. So when the ministers are saying we are looking to even ask OPEC to give us more quota, then you begin to wonder of which additional quotas, when additional oil production quota, when you've not even met the primary target that is given to you. So that is where I still have a lot of issues, and I hope it is being really worked on.
Okay, so Mr. Abiola, now how sustainable do you think this level of profitability, given the ongoing maintenance, delays, and assets shutdowns?
I think we shouldn't even be talking about profits for now. I think we should first of all be able to stabilize our capacity, because if you are practically above something, to fulfill the requirements of that thing shouldn't even come into discussion. For example, if somebody has a car, and that car speedometer is just at 100 kilometers per hour, and you are constantly on it, because where you really want to be is 150 kilometers per hour, then you will not be shuffling between 98, 100, 99. You will be hitting that 100. Like it will. You let the whole world know that this thing is not what we want. We are far above this. So, for me, I don't think we should even be looking at profit first. I think profit is a byproduct of value and production. So let's increase the capacity. Let the whole world know that this is our capacity. Then we can now start talking about profit, because we have so many sectors in which we have been profitable, in quotes. And the question, from me is, what exactly has been the result of those profits? So I'm not really focusing on the profit. Let's even demonstrate capacity for once. That's what I have in mind. Yeah.
Okay, let's look at the impact. Okay, you wanted to say something.
When you look at it, when you say they made about 400 billion, that's less than $500 billion.
Yeah.
For a country like ours, an oil company of a country like ours. So yes, it is good that the NNPC is now releasing results, a month by month outlook. This is what we are doing. So for accountability, that's an improvement. But I think that the core function, which is that drilling of that oil, has to, because prices have been around $60 per barrel this year. But now it's even back to 60, 61. So it has been ranging. So it is important the volume is there. It is important that the volume. So no matter how you look at it, no matter how you tell us this is profit after tax, there has to be maximum volume that can now guarantee, because we also have so many things. In fact, when you look at the breakdown of our oil production, out of the this is 1.61. We moved 200,000 for condensate. We have about 1.4. Of about 1.4, we're actually making real revenue from less than 800,000. Remaining are either local deals, swap contracts, and all. So when you look at that, you realize that we actually need to be meeting our quota to even have at least 1 million barrels per day that comes in as revenue to NNPC. So whichever way you could look at the numbers, 400 billion is too small to be made by an oil company of a country, not the oil company that is a multinational. It is a sovereign nation. That is, so at least $1 billion target, a profit after tax is a good figure. It makes more sense. Exactly.
Okay, so let's look at the impact, right? What impact will the accelerated AKK pipeline and the OB3 project have on Nigeria's broader energy security outlook ahead of 2026?
So I think that the pipeline really solves a lot in terms of, because for the longest period, we've not really invested a lot in gas. All we've done more has been crude, right? So, and I feel that gas would even make us more money in the nearest future, because prices of crude will get to a point to tank, and it will make so much sense for oil producers anymore. But gas will still remain, because whatever renewable energy phase we are going into, gas is a pivotal part of that. So the faster we get this contract done, right, the faster we're able to get the countries involved done, the faster it is for us, because for us locally, we now need a lot of gas for electricity. Now for exports, we are seeing now we are seeing countries, UK for example, has surged its own deal with us based on just gas. So the opportunities are there. It is just us pushing a lot more. In fact, I would prefer even us divesting from crude and investing more in gas.
Because if you look at it also, you find out that the amount of processes that gas has to go through to be available is far lower.
Compared to
and the infrastructure needed is also cheaper.
Exactly.
Compared to crude oil.
Compared to crude oil, yes.
Okay, with that being said, but while looking at the NNPC reports and the state of the crude oil, the country records a rebound in external finance. And this is taking us to the next story, where Nigeria recorded a major rebound in external financing in 2025, attracting a $20.98 billion in foreign capital inflows between January and October, which is 70% higher than all inflows in 2024, and a massive 428% surge from the $3.9 billion that was recorded in 2023. According to CBN Governor Olayemi Cardoso, this renewed investor appetite is linked to FX market reforms, improved transparency, and tighter macroeconomic management under the current administration. Earlier, I think NBS data also showed that quarter 1 2025 alone brought in $5.6 billion, which signaled the strongest foreign interest in Nigeria in several years. The external sector strengthened further as Nigeria's current account balance rose by over 85%, jumping from $2.85 billion in quarter 1 to $5.28 billion in quarter 2, supported by rising non-oil exports and improved FX flows. Foreign reserves climbed to $46.7 billion by mid-November, the highest in almost 7 years, providing over 10 months of import cover, Nigeria's strongest external buffer in a decade. The CBN notes that these reserves are being built organically, not through borrowing, but it was helped by the 18% growth in non-oil exports and a 12% rise in diaspora remittances in 2025. So let me come to you, Daniel. What do you think of this?
Well, I think the last statement is what really what I need to understand when the civilian governor says that they are organic. So I think that's because a 12% rise, in remittances and a 15% rise in non-oil exports cannot contribute to 20 billion in capital inflows we get. So I think we need to understand that when we say earlier when he said the tightening macroeconomic policies weren't driving in, that's already answers the question, because then if we've decided this tightening policies from 2023 into 2024, so why didn't we have a lot more flows, right? So I think more often than not, it's about the balance, about the fact that there is a balance, and this year we maintained interest rates for a longer period, right? We didn't do any significant increase this year, but we maintained it for, and in fact, the only decrease that we've done is 0.5 basis points. So, for what we've done, stabilizing the economy the way we are, that is why we attracted so much of those of capital inflows, and a lot of them have gone into three major places. A lot of them have gone into one has gone into the capital market. We've seen a surge in stock exchange markets alone. This about 25 trillion or thereabouts. In fact, you can even almost equate them. 25 trillion, $20 billion, almost the same numbers. Right? We've seen a surge also in our bills and our bonds, treasury bills, almost oversubscribed. But when we did the Euro bond was it September? It was almost oversubscribed almost immediately. Right? So we've seen, and lastly is this capital inflows we've seen. If you see the NNPC data, it shows that some particular states are getting some kind of little investment of $1 million, $500,000. So and talking about foundations, welfare, and all. So I think that is how our composition of our capital inflows has been, and that is why it is very surprising that we came up with a capital gains tax at a point whereby we are attracting so much funds. Yeah, why are we trying to chase them
away? I wanted to quickly add also that one of the reasons that I feel also helped us to attract so much is because of this singular exchange rate. Because one of the major issues we used to have is investors bring in funds. When it's time to repatriate their funds, it becomes a problem because of exchange rate, because they don't have availability to subsidize dollars from CBN.
Yes.
But now, a lot of investors watched last year, let's see what was happening, and they saw that, to some extent it stayed, but there was still a high level of fluctuation, You will see 1,007, 1,003 within a month. But if you check this year, you see that for greater part of this year, there has been stability on the exchange rate. Not whether it's cheaper or higher. That's not the discussion yet. The discussion is, has it been stable? That if I push in $1 billion at 1,500 to a dollar, can I still take my money back at about the same amount? So I think this also contributed a whole lot to this particular figure. Okay,
so let's talk about, because you already said that you had problem with the organically thing. So how resilient is this position, especially if oil output, fluctuates or global financial conditions tighten more?
We keep interest rate high. That's the answer. Because then, if you don't keep interest rate high, and oil prices are tanking, you're not producing as much as you should, there's no way you're getting funds from.
Then you're attracting funds.
Exactly,
you must attract funds.
Exactly. So the only way you option, that is why when people, when I think I was talking about it on Thursday, that when people are shouting the CBN is still keeping interest rate high, it is just basically edging its position. Because you cannot commit too much into an economy that you are not guaranteed of what happens next. Because we are not even guaranteed of any of those variables. The only variables we are guaranteed of right now is that the tightening is still tight, and we can still attract funds into the new year, and that is what really matters at the moment.
Okay, so let's look about ahead of 2026, right? What does this say about Nigeria's trade competitiveness and FX sustainability ahead, going into 2026? Daniel.
To be sustained.
because then the rate is the
rate remains the same.
Yes.
The same thing will happen.
Exactly.
The only thing is, if other variables out of our control take the front burner next year, then it might to some extent affect us a little bit. What I mean by that is, if for any reason, for example, the demand for crude oil becomes so low next year, maybe due to alternative energy, maybe due to China flooding the whole global space with their cheap cars, and the demand for crude oil now reduces, then these are the kind of things that might affect us a little bit. But if we keep status quo, then we expect status quo.
Okay, so let's go into the next story, and this one has, I think a lot of us is going to really react to this particular one, because it's about the company income tax, right? So Nigeria recorded a new development to this whole company income tax, right? Because why they say they attracted capital inflows, they attracted $20.98 billion. The company inflows is a little shaky, right? So this is where I'm going to go into the next story. The revenue surged to $2.78 billion, which I think is in Q2 2025, marking a strong 40.27% jump from the 1.98 trillion naira recorded in Q1. Domestic companies drove the bulk of the earnings with 2.31 trillion naira, with foreign CIT inflows contributed 469.36 billion naira. The financial and insurance sector led growth with an extraordinary 772.29% increase, followed by wholesale, retail, and vehicle repair activities at 538.38%, and household employers at 526.79%, signaling strengthened profitability across key segments. Now, in terms of contribution to the total CIT, financial and insurance activities dominated with 44.13%, manufacturing, followed at 15.57%, and mining and quarrying contributed 9.18%. Meanwhile, sectors like extraterritorial bodies, education, the likes of public administration recorded sharp declines, reflecting persistent structural strain. Despite these headwinds, the CIT collection still rose 12.66% year-on-year, underscoring a steady improvement in government revenue mobilization, which is taking me to you now, Daniel. How do you see this CIT?
Okay, so I think that for me, CIT is usually a measure of company activities / performance, right? So you want to see it from the angle of our businesses in the country doing well, right, in terms of their performance. However, there are two issues with Nigeria. But one is, apart from the fact that we don't have a measuring scale properly. Number two is revenue mobilization, that the collection has always been a problem, right? So what I'll basically say now is that I think we have improved the revenue collection, right? But it doesn't necessarily still say a lot about how we can use these company income tax figures to reflect a broader economic growth perspective. So that is where I'm still having issues with. But when you look at people, the usual players, financial sector, the usual players, they are the ones that will definitely, because no matter at every point in time we've had economic issues, they were still performing well. So what I would have wanted was a more prevalent activities of the manufacturing sector, of the fast moving consumer goods sector, where that is where the real sector, that's where people consume agriculture, that's where the real consumer demand is, that you can easily test and know. So I think maybe what I would basically do is to wait for what these figures will look like next year, to have an idea. Even though next year the tax model will change there's no longer CIT. It is now directly based on profit made. It's not no longer income tax that would have a lot of deduction. So the numbers will be higher definitely next year. However, of course, some companies also be exempted. A lot of companies also be exempted.
Yes.
But I'm expecting the figures should be higher because of the way the taxes are now collected and the fact that everybody is now included. You have more companies, whether you are doing anything in that company or not. more will be captured, and let's see how it goes. But on the broader economic perspective, I think we can say this year, but because these figures is for last year, because it is the preceding year. So so last year was a bit shaky on all sides, but let's see what happens in 2025 and 2026. The figures for us to be able to have a proper.
Nigeria's company income tax surged 40.27%, right? What specific economic activities or enforcement actions, are driving this remarkable jump? What do you, and can it be sustained to Q3? Do you think it can be sustained to Q3?
Well, I think the major thing is now that the Nigerian government is now taking technology a little bit more seriously.
Yes.
But we still also have a lot of fine-tuning to do. What I mean is this: how do you tax people without a proper database? Does Nigeria know where their citizens work? Do they actually know how much they earn? An average Nigerian working in a private company that there are just 10 staff there and is earning 500,000. How does the Nigerian government know this is your salary for them to actually know what to tax out of it? So I feel that there's a lot of fine-tuning that is still going to happen. I feel that technology assisted them. I also feel that employment of a whole lot of informal guys, one way or the other, also assisted. I also feel that a lot of oversights, monitoring. If you look at all those mining and stuff, everybody knows that there are illegal miners all over Nigeria. Okay, but I also feel that the government is doing a whole lot more to monitor a whole lot of areas and thereby be able to include people that have not been included before. But the question for me at the end of the day is, okay, you've generated this much tax. What is the reflection on infrastructure? What is the reflection on quality of life? Because the whole idea of tax to begin with is that 1, 2, 3 come together and say, guys, let's put something in the center so that we can make sure that our security is okay, we can make sure that there's food, we can make sure that there's power. That is the whole concept of tax, to make the populace feel that by their contributing to the middle, they can do what, something general for everybody. But are we feeling that? I don't think so. But we can also wait, because it's not an immediate effect sometimes. It needs to come in, then let's see the redirection where the funds actually go. But as at now, I don't think that people are really feeling the effects of the tax that has increased in collection.
Okay, so does this, this whole new revelation reveal strong sectoral performance or over dependence on just a few industries for government revenue? And away from that, what does this contraction signal for Nigeria's fiscal stability going forward? What do you think?
First of all, it's correct. I think the government is over-dependent on a few sectors. I feel we have a whole lot of sectors that can give us a whole lot that have just been abandoned. And I feel that the reason why they are usually abandoned is because the work that needs to go there for us to get the result out might take a while. I've once heard of a governor in Nigeria that got a proposal on his desk and he saw that he could actually plant economic trees that would mature in like 7-8 years and would bring the state a whole lot. But because it's not between 3 to 4 years of his tenure, he was not interested in it. So the earlier government starts behaving like a continuum, the earlier we start seeing investment in some sectors that while we are cashing out from the so-called FPIs, in quotes, we can actually also be pushing the FDIs, if you understand what I mean.
Yes.
So while we are pushing agriculture, we know there's a 10 years plan, we are pushing on manufacturing, we know there's a 7 years plan, we can also be diverting into things that can give us quick money like tax. So for now, I feel that truly the government is over-dependent on some sectors. Maybe because it gives faster payback, returns on whatever, than some other sectors that might actually take a long time. But once they start producing, they usually don't stop producing.
Okay.
Because one of those examples is the service-based sector, telecoms, entertainment, for example, right? That there are a lot, right? I mean, particularly the service-based sector, right? The only thing that we see in the news is the financial services, the CBN tightening policy, capitalization, and all those. Even now, insurance, same thing is happening with insurance. But an economy that largely depends on those sectors is not necessarily ready to, is not building as properly, and that is where the difference between economic growth and development is. The development phase is where you can just sleep, right, and you can see a country where China that is housing sector is doing numbers than some countries major oil sectors, right? So that is where we need to get to now. We cannot just, yes, we are in the phase of trying to increase mobilization, which is fantastic. But I think that what we usually do is that we just do one thing at a time when we can actually do all things at a time. Yes. Why do I have so much people in government when it's only one issue and everybody's just waiting till that issue is done before? So why do you have a budget? Why do you have people? Why do you have ministry?
Let's have one ministry.
So that's the real issues, because we have a ministry of trade. We have all of them should be running together concurrently, and the target, because the taxes is one of the ways you know if you are working, because if you deliberately work on a certain sector, for example, entertainment industry, for example, and you're saying we are investing in this entertainment industry to become this more formal, this. Taxing them in a year or two, is effective because you've deliberately invested in that sector. That is how countries that only depend on taxes do. So if you want to start doing that, you cannot just become tax collector. You cannot just become someone that just carries a bag and just walk around the market. No, you have to develop the market also, so that the people can more customers can come into the market.
And can get more at the end of the day.
More, yes. Okay, and while the CIT surges, the Nigerian equity market post its worst performance in history. I don't know how to feel about this, but I know that this somehow sparked a conversation with a fellow, right, when we were talking about if we are all attracting all of these things, why are we still going down in some places that we're not supposed to go down? With this whole Nigerian equities market posted its worst monthly performance in history in November 2025, wiping out 6.54 trillion naira in market value, the steepest loss since NGX crossed the 10 trillion naira mark in 2013. Market capitalization fell 6.69% to 91.29 trillion naira. I think it fell from 97.33 trillion naira in October, while the all share index plunged 6.88%, which is a drop of 10,605.93 points. The sell-off intensified following rising fears over the planned 30% capital gain tax set to take effect on January 1, 2026, triggering widespread profit taking. The markets was single-day loss occurred on November 11, and when the ASI crashed 5.01%, erasing 4.6 trillion naira in just one section. Although there's a brief rebound following the finance minister's reassurance during the listing of the 1 trillion naira funds, helping the market recover about 2.6 trillion naira, the gains were short-lived, with total month-to-date losses widening to 6.98 trillion naira by November 28. All major sectors ended deeply negative. Industrial goods, I think it was 13.80%. Then we go to the insurance, is around 12.07%. Premium index 10.44%. Banking 5.77%. Oil and gas 7.33%. Despite November's rout, the market remains positive year to date with 28.57 trillion naira in gains and a 39.44% YTD rise in the ASI, though momentum has now weakened sharply ahead of the CGT implementation. So what do you think of this loss that we had in Nigerian equities market?
I think that first things first, maybe because we play in a wider space. I think you have 1 month in a year where you have this kind of figures. I think last year globally it was maybe October. It was we had the red, we call it the red, was it the red Friday or red Thursday, and everybody, and globally stocks were drop. Even November, even globally also. When you look at average stock performance, index performance globally, you see that it still dropped. At least probably the highest was a marginal gain of maybe 0.8 to 1%. When you look at whether it is Nasdaq or the Japanese index. So it is just a combination of sentiment that happened at the same time. Right? Remember, at the beginning of the month was when Donald Trump threatened to invade. The CGT was looking like it was going to be real, and also sentiment to also drive the fact that profit taking will happen at that point. So if a market has given you 40% in all share index year till date, you can be sure that you will also be ready to record some certain level of a particular month that would not do that kind of number. When you look at the trend, for example, we saw massive surge from January till July. Consistent surge. Then in August, it rebounded. Just stayed a bit, consolidated a bit for like 2 or 3 months. Then you get October numbers again. Then it went back. So it is just a typical market behavior, right? Because we're looking at it from naira terms. In terms of dollars, this is probably not the highest losses, because we probably did highest losses during the pandemic. We had highest, but because if you look at it in dollar terms, it's just around $4-5 billion. But because it is naira term, it is the highest, because this is the same year we've done the highest numbers in 20 trillion added to the market. So I think market players should just understand this thing and just not let us overblow the matter. However, CGT is a major contributor, and I hope that we've actually created confidence, because see, the policy is too confusing. 1 minute you've decided that this is what you're going to implement. The next minute, because people are shouting, you say no. So what is the plan?
I think as the noise has gone down a little bit now, everybody is now quiet again. Nobody's saying anything again, and I think that both the lawmakers that called the minister to come and change a law that has, or to come and talk about a law that has been passed, they all need to come out, united front, and say, okay, this is the stand. This is actually what is going to happen next year, because as Daniel said, it is still not clear. So if it's not clear, that means there's still going to be a little bit of panic in the market. But when we have a clear direction, good or bad, the people that participate will always participate, but they want to know what they are in for, so that if I'm going to come in and you guys are saying you take 10% or 20% of my profit, I need to know beforehand, so that I can also accommodate that in my plans. But if I don't know, then I could say, oh, they will not take, then they eventually take, then it
cause problems. Okay, so how should investors position themselves ahead of January 1st capital gain tax rollouts, like with the ASI plunging 10,605 points and blue chip stocks losing heavily? How do you think investors should actually come in, whether it's clear or not? Because
most investors will behave like an average Nigerian, just to look. That's what most people will first of all do.
Exactly.
Yeah, because when they say, when we're growing up then, when they say, oh, there's going to be environmental in Lagos, or there's not going to be, what do we first wait and see what's going on?
To be sure.
Are people outside? Yes, there are people, okay, we now come outside. So I think most investors will want to see, okay, or test with a test amount and see what goes on before they come in full force.
Okay.
For me, I think that the government is, and this is why I usually sometimes, right, when you make decisions and you don't look ready for these decisions, you tend to lose ground, right? If you've gotten to yourself to a point whereby you are tightening monetary policy, everything is impacting going into 2020, 2024, 2025, and you made so much gain. Now you are in the global space. Now, imagine
the recognition is there.
Yes, imagine market conversation. Nigeria is there in terms of what our market is doing. So now everybody can see you. Now you are so suddenly what you now need to do to continue that momentum. You are now causing unnecessary.
This is the time for them to now do the
best. So now I feel that by now the Minister of Finance should have been saying, in January 1st, this is what we are implementing now, because this is when these guys decide what to do in the new year. We saw what happened in January 2025. Markets started buzzing from the first day.
Are already finishing their discussions now.
Exactly.
As per what to do in January.
So
they will not decide what to do in January. In January.
Yes,
so by now we should be clear on what's happening with CGT. Are we suspending for 6 months? Are we suspending for a year? Are we reducing the figures? I know we've started about reduction to like 25% or 20%. Let this thing be clear for what is going to be implemented in January. Let these investors know what they are expecting, and everybody start moving. Because then, if we do not follow up with gains we've made this year on the all share index about 20 trillion added, then what was the whole point of it in the first place?
That's a very, very, very interesting question. Let's go on a quick break. When we come back, we'll look at more stories. Stay tuned.
Nigeria's economy, the global market, what does it all mean for you? From stock market insights to global financial news you need to know. From Wall Street to the main street, and then of course, the marketplace.
Get the answers you need every week on Businessless with me, Faith Joseph.
as I bring into focus the stories, strategies, and shifts shaping our economy. No angle is missed as I talk about the business, the people, patterns, and possibilities behind them. Welcome to the Business Lens.
Rapid TV, rooted in truth, driven by impact.
You are welcome back. You are still on the Business Lens on Rapid TV Abuja. My name is Divine Alex. Diving straight into it to the next story, where Nigeria has secured a $500 million policy-based loan from the African Development Bank Group to fund the second phase of the Economic Governance and Energy Transition Support Program for 2024 to 2025. The facility is designed to strengthen fiscal policy reforms, boost non-oil revenue, enhance public financial management, and reduce fiscal risks across MDAs. It also provides direct budget support to a time when Nigeria continues to confront fiscal pressures and a widening financial gap. Now, the package will also accelerate reforms in Nigeria's struggling power sector, aiming to cut energy poverty, attract private investment, and improve electricity reliability. It further, supports the implementation of the National Energy Transition Plan of 2026 to 2030, including appliance energy efficiency standards and climate adaptation measures. Direct beneficiaries include a couple of, like a Finance Ministry, FIRS, DMO, NEC, NCCC, and others, while AFDB's active portfolio in Nigeria currently stands at 52 projects worth $5.1 billion. Now, let me start with you, Daniel. Now, how significant is this AFDB's $500 million facility, including Nigeria's current fiscal gap?
Okay, so I think that the whole it's one of the most blanket loans you can ever talk about.
Okay.
So you said it is a fiscal, it's meant to reduce fiscal risk.
Mm-hmm.
You also said it's meant to be energy transition.
Mm-hmm.
So in short, we're just borrowing to finance what we're trying to do, whether it is day-to-day, and what was included was MDAs. All those talk about energy poverty, I don't even know what that means, right? So transition from what to transition from what to
there
what.
has to be something there.
Climatic.
Because I kept asking myself as she was reading that, what is this loan for? What's this loan for?
So basically, I'm just borrowing to finance our budget. There's no like this. The whole grammar is way too much. It's just way too much. So at the end of the day, we just keep borrowing. Now, because it is so blanket, how does the AFDB know that this budget or this energy transition plan has been implemented?
Yes. No, so what immediate impact should businesses expect given this? Yeah, let's talk about businesses.
Nothing. Nothing. Basic fact that is nothing. It's just monies that is going to be given to the MDAs to finish the 2025 budget that they've not fully implemented yet, salaries and all. It's because then see, it is not meant to be difficult. $500 million dollars,
yes,
it is close to it is about 700 billion naira, is to build more grid, 30 mini grids across rural areas. Put the area, put the area so that in 6 months you can go to the rural area and see it. So if you don't do that, so any other thing you're just talking about, it's just paper and English language. They're just used to collect money, basically.
Okay. So Abiola, given the persistent structural issues in power sector, right? How far can this support go in improving generation, transmission, and private sector confidence?
The question is still going to hit a brick wall because we don't know specifically what it is for. It's just like saying that a restaurant opened down the street. You're now asking that what impact is this going to have on Rapid TV? Both of them are disjoint. Like they are not related. So if you give us blanket statements, I cannot give you specific answers because I don't really know what the funds are for. You might think that okay, energy transition is from the normal grid we have, or to maybe solar,
because
or
it's
to
climate.
gas,
Exactly.
or to wind energy. But I might also be wrong because I'm just guessing at best. But if they tell me specifically that, okay, like Daniel said, we are building this and this grid, or we are building solar farms, like they did in Kano some years back, that, okay, we're going to build 10 times of that in this place, then I can tell you the effect it's going to have on businesses. Otherwise, anything I'm telling you now is just guessing.
But do you think that this particular $500 million is actually going to, support us, even if it's a little? No, I think I heard somebody say that.
Divine. So part of this conversation is energy poverty. What's energy poverty? Because the word is very.
I like the word. I'll start using it.
Energy poverty can be from two perspectives. From the producer of the energy and the user of the energy. From the producer of the energy, you don't have enough money to build infrastructures for the user of the energy to consume.
Hence, there's not enough energy.
Exactly. Or energy poverty from the consumer side, that they can't afford the kind of infrastructure you have on ground to consume the energy.
Hence, they cannot consume.
Exactly. So, which of them are we trying to solve? Are we giving money to people to be able to buy more electricity, or
which I like,
or we are giving, or we are producing more sustainable energy, cheaper for people to. So, either of these two things, it has to really be talked about. And of all the MDAs talked about, NERC is the only one that has to do energy. So what is the other Minister of Finance? Discourse, of course, they all come under the energy.
Fired 800 people just some weeks ago.
Yes, they did.
So
just before we got 500, maybe they would have waited a little.
so that is the real issues, and I don't know. So this kind of you don't merge it together. You can say it in two different statements. We are 700 billion naira. 100 billion is going to NERC for something. 600 billion is going to the MDAs to solve their fiscal issues. But merging together is selling it. Yes, it will be sold to a body like AFD because that is what their job is for. But for Nigerians that we want to see the dividend of whatever is happening, we need to understand it clearly.
Jokes apart, I think that this ambiguity, because I spoke with a lawyer, I think last year, we were just discussing the Nigerian constitution, and he was trying to explain to me that Nigerian constitution can be clearer, can actually be clearer, that there's a lot of ambiguity in some things. For example, if you say, oh, if you steal yam, this is your punishment. But he was trying to explain to you now, he's now saying that what is there is like, if you steal yam in the morning, this might be your punishment too. If you steal it in the evening, if it's white yam or red yam, this is what. So this ambiguity is trickling down to the fact that even when we want to take, because if you want to take funds, even at phone level, you want to borrow phone loan, they will ask you, what is this money for? You say business, you say rent, you say whatever. So I believe strongly that I believe there is clarity in this. Maybe we are not being, because I don't believe that a government will submit an ambiguous paper to an organization as big as AFDB and they will give you 500 million without. No, I believe that there will be specifics in whatever papers was used or were used to get this loan. But
do you think that this money can actually help us reshape the country's energy transition part and investment priorities? Sorry,
Daniel. The easiest way to answer that is to look at previous loans that have been said to be used for specific things. Have they been used for those things? Have we benefited from those things? Where are the roads that was given for concession? If you're traveling from here to Lagos now, you practically will spend the whole day, if not 2 days, to get to Lagos. But you will find out that one way or the other, some of those roads have been given as concession for companies to actually fix and put toll gates. Some of them, they receive borrowings for them. But at the end of the day, it's still there. Nothing is being done. So the question you're asking, I'll allow Daniel to answer.
so at the end of the day, I think that the energy transition plan, for example, which is usually which is more focused for Nigerians, because the fiscal side, not necessarily. The government collects a lot of tax. This year they collected more tax than they've done. The president was celebrating 20 trillion tax collection even in August. So we've also done our NNPC is taking more revenue now. It's more balanced. Releasing profit after tax, right? So fiscally, we are making more money, right? We're not paying subsidies, right? So fiscally are making more money. So the only thing that concern, and we are still borrowing more. So that's why I was concerned about the fact that why merge the two conversations? Why not separate energy transition conversation separately and separate the fiscal issues separately, so that people will know which, because energy transition is what concerns them more, because it's an infrastructure. How are you, even if it is 50 billion naira that is coming to the energy conversation here, what is it? How is it helping the transition plan? Because transition plan, for example, it's for a 3-year plan, 2024 to 2026. 2026, which is next year. Do we get a report of what has happened with the transition plan, and what are we even transitioning into?
What are we transitioning into? That is the question that you asked. I think when I had this conversation sometime earlier, I had somebody say that he does not understand this whole money borrowing thing, that is looking like, saying that, oh, we are going to build a house, come and see the site, this is the site, right? And then you just drop 2 blocks. Work is ongoing. What is going there? There's 2 blocks there. That is what the person
We've done
said.
Before. We did a rice pyramid, and we did not do rice.
That's how the person. Okay, let's dive straight into the market, where Nigerian exchange opened December on a mildly positive note as bargain hunters returned to the market after record 6.54 trillion naira loss in November. The all-share index ASI edged up 0.42% to close at 144,120.84 points, while market capitalization gained 383 billion naira to settle at 91.67 trillion naira. Renewed interest in banking and consumer goods stocks helped stabilize trading sentiment ahead of fresh regulatory guidance on proposed 30% capital gain in tax. Despite today's slight rebound, several blue chip stocks remained under selling pressure. The NGX Premium Index, dipped 0.18%, reflecting continued cautious positioning by institutional investors. Telecom, industrial goods, and oil and gas counters witnessed mixed performance, with a mild profit taking in cement stocks dragging sector momentum. Market breadth closed negative, with 21 gainers versus 27 losers, signaling lingering volatility. Trading activity also improved compared to the last session of November. Total turnover rose to 412.7 million units, valued at 6.8 billion naira across 7,210 deals. Banking stocks led volume and value, contributing 36% of total trades as investors took advantage of low pricing ahead of year-end portfolio adjustments. Analysts say December may remain choppy, but offer selective opportunities for medium-term investors. So, one question, right? How does this, help our economy? What does it look like with this whole new markets?
December is short term. It's not even medium term. December is just come, trade, do your day trading and go. So nobody is coming to invest in anything now. Of course, some smart investors might actually consider
investing now.
Some stocks that are low in prices and want to push in some funds and get, because most likely they will. For example, the banking stocks, for example, by March we have capitalization deadline. Banks would really, so banks that are met up, banks that are meeting up, banks that are merging, they'll probably have a surge in their stock. So if you entered quite low, you might will make more profit than others. So I think it's a combination of both, right? So the volume we would see, it won't be as bad as last month. Of course, it won't be as bad as last month, but it will not be consistent. So we might have a day of losses, a day of gains all through the year, up until the 3rd week of December, and markets will practically go on a number up until January. So I think that is what we should be expecting for December.
Okay, thank you so much, Analyst Daniel. Our time is fast spent, right? And thank you so much, Abiola Adekunle, for being on the show today. And that is it on the Business Leads. Thank you so much for being part of the show. We see you again on Thursday at 11 a.m. And do not forget to stay with Rapid TV. My name is Divine Alex. Bye for now.